Thank you.
Well, let's take a look at 2010 so far. And I was just saying that this is probably a good time to take a vacation because the market has disappointed, I think, many people in terms of its recovery. So year to date, it's done just about 16%.
Thereabouts.
And for August, we saw it come down 6%. And that's obviously after a bit of positive news with development with AMCON and so forth. But as a whole, let's just take a sense of, let's get your sense of the top performers and the worst performers in the first 8 months of 2010.
I like to say that it's not so much as the market disappointing as a lot of investors having too high expectations for market performance, really. You know, so much hype surrounded the expected recovery in earnings, therefore within the banking sector, which even though it occurred, was not of the sort of magnitude that, you know, market expectations apparently have been built around. So I think that's part of why, you know, you're seeing sort of, if you want to say exaggerated reactions then, as it becomes clear that the recovery, especially from within the banking sector, is going to be a bit slower than anticipated. So those expectations actually drove the strong performance, which you saw in the first quarter, and as things moderated, we had a weaker performance in April, May and June were actually negative. Some mild recovery in July, and then we had this big dip in August, which also contributed to technical, which also has some technical component with the CBN deadline. But I think in terms of performance, notwithstanding, especially holding on to the earlier gains from earlier in the year, you have sectors like food and beverage in particular, which has done quite well, as well over 60% this year.
Sorry to cut in, but what is driving that performance? Is it more of risk aversion and people going away from the banks because of the uncertainty, or is it more of a recovery of earnings of certain companies? You know, how would you describe the reasons for that performance from food and beverage companies?
For food and beverage companies, really, I think if you delve into it on a stock-by-stock basis, I think it's varied at various times. So at some point, you had reactions to Nestle's big expansion plans spurring that sector. And at some point in time, it was Cadbury, which was on a fantastic run, gaining about 30% within a week at some stage. And at some other time, flour mills as well, yeah. So you have, you know, it's almost like there's almost a relay, really, you know, changeover within that sector, which has, you know, helped really to sustain the performance that we've seen. On the whole, also on a sectoral basis, I think it's clear that the food and beverage sector is a defensive sector. So you have investors finding comfort in the fact that regardless of economic situations and challenges, earnings to some extent will be preserved. You're not going to have sort of damage. And especially for the blue chip established players, you find them even still eking out some growth in the environment.
And then, of course, there's the cement manufacturers. We saw on average, year to date, from your notes, it's about 41% on average performance. I mean, that is fantastic. And they're clearly outperforming the market. What is the story behind that performance?
Within the cement manufacturer space, I think a lot of expansion efforts have been put in place over the years, and it's becoming clear that those efforts are beginning to yield fruit. BCC in particular is a case and example. Given the success it's had with implementing some of its expansion plans, you know, investors have really just, you know, loved the stock. Basically, it's been a major contributor to what we've seen so far this year. Recently released half-year results indicate that they were able to push about almost 800 tons, metric tons out over the period, which I think, you know, is a positive sign. With room for them to do more. Ashaka Cement as well has also, you know, spurred a lot of interest, doing quite well over the period. So I think that, you know, those are the things that have really driven that sector's performances.
But also, let's take a step back and look at, you know, why the market hasn't performed so well. Obviously, there are several factors, several headwinds that the market is navigating through right now. But I think earnings as well have disappointed to some extent. I mean, the likes of Nigerian bottling, even BCC, which you just mentioned, their half-year numbers were not great. Let's talk a bit about that. Earnings, to what extent do you think has been a factor in the market's performance?
Earnings have been key. you know, if you even look at the positive, like, so if you look at the downtrend really from April, the exception that July was largely because of reactions to second quarter earnings performances, you know, expectations that, like I mentioned earlier, that will improve. But like you said, by and large, especially from within the banking sector, is panned out a bit in terms of, you know, recoveries, but there's really no upside surprise. There's really no positive surprise that, you know, has gone beyond investors' expectation. I think, you know, that's really why you're having a more toned down performance in more recent times.
All right. So we can, as we begin to wrap up, let's talk a bit about the outlook right now. Which sector do you think is likely to perform very well over the next 4 months?
As it stands right now, we're still believing that you could find a lot of value within the banking sector. Cherry picking, really, it's not just across board. It's partly to do with the fact that, as it stands right now, most of the earnings that you're seeing are within, you know, just back to, you know, pre-crisis levels. There's also the concern that for that sector, you're not going to see much in terms of resumption of lending in the immediate period. So those are concerns for that sector. But I mean, for most of them, on a purely valuation basis, they portend a lot of value, which you want to lock into before it then becomes, you know, a rush affair for everyone.
Okay, so obviously your picks are the banks.
Yeah,
at least for sector play anyway.
For most of them, yeah.
All right, thanks a lot, Adeolu.